Oliver Twist joined. Cool. Michael Junko. Matt's here. Boo joined. I am too moody. Mickey's here. Jim Brown, what's up? Oh, it'd be cool if it was the real Jim Brown, wouldn't it? Chicago Bears. Woo. Jim Bowman, what's up? Mike, what do you set up first? It all depends. All depends on my mood and what's in front of me. Matting Kuting. Matting Kuting. Say hi. Hi, Matting Kuting. Wow, we only got 17 people here so far. Let's get this thing rolling. And here we get some Instagram tonight. Can't forget some Instagram. Uh-oh. Uh-oh. Couldn't log you in. This is not good. Can't join on Instagram. Or can I do it on this one? Hold on a second. Hold that thought. Marcus. Good afternoon, Marcus. How are you? No, no, no. Okay. Page isn't available right now. Uh-oh. We have issues. Hey, Doc, Mars Z, how you doing? I'm trying to get the other phones up and running, and it seems to be having issues at the moment. Oh, Wi-Fi's not connected. Damn. Huh. Michael Sinclair. Michael replied to your story. Hi. Thoughts on Disney, the mysterious Avenger. Where can you find where and when companies pay dividends? Oh, dude, that's cool. You're looking for a dividend calendar. Go to Google and look up dividend calendar. EX dividend calendar. And I'll tell you exactly where. This is what I use right here. I use Thinkorswim. Okay. It gives me all my dividend calendar right there. I'm trying to get this damn thing set up, and I don't know why it's not setting up. All right, well, it's not really doing quite what I wanted to do. It was set up the other day. I love the info. Hey, Biz Coach, how you doing? Go-Kart Mozart was checking out the weather chart, seeing if it's safe outside. And little early whirly kit, here's a curly whirly, and asked me if I needed a ride. Blinded by the light, revved up like a douche, no roller in the night. All right, I'm not being able to do Instagram tonight, guys. I'm sorry. Why can't I do Instagram tonight? Huh. Come on. It's not allowing me to sign out of one and into the another. It's not letting me sign out of this one and into another one. I don't think I'm going to be able to do this. All right, can't log in. All right, no Instagram tonight. Sorry, guys. Let's just get started. Ford, Prue. Hey, Keith Carlin, how you doing today? Joey, good to see you, boss. All righty, works for me. Let's just get started. I can't do Instagram tonight, having issues. Got a new phone and it just doesn't want to link up. Oh, yeah, that's why. Okay, hold on a second. Wi-Fi. All right, I'm going to hold up here for a second. Don't go anywhere. I need this. All right, see if that did it. And there it goes. All right, so let's see if she's set up now. Page refresh. Page isn't available right now. Why aren't you available? Not now. Not now. Okay. No. Okay, chats. Select chats. No, don't want to select chats. Why can't I do this damn freaking thing? Fuck it. Sorry about that. Hey, Keith, how you doing? Did you enable Wi-Fi in settings? Yes, I did. It's a new phone and have been able to sign up for it. And I signed out of this phone, so it's just not working. All right, well, the hell with it. No Instagram tonight. Sorry, just YouTube, TikTok, and Facebook. Well, let's get started. All right. All right, so what do we want to look at today? Okay, questions. What do we have? What do we have for questions today, guys? DG, Dollar General. There we go. Dollar General, interesting choice. ET. All right. All right, we'll take a look at ET in a little bit, but let's take a look at Dollar General. CP, Starbucks. CP and S-Bucks. S-Bucks. Hey, Doc, just to let you know, I'm flying down tomorrow afternoon, so I should be in Florida tomorrow afternoon. AGNC and Disney. DIS. All right. Do you think trading is gambling? Only if you don't know what you're doing. You know, anything is gambling if you don't know what you're doing. Now, I've been doing this for a long time. I got to get up and change the light. Light's shining in my face. Hold on a second. All right, that's much better. BMY, Bristol Myers Squibb, and Marathon. BMYMRO. KVU. Now, Secretary, didn't we look at KVU last night? KVU. We looked at that one last night, dude. Yeah, I get it. It's a spinoff, which means it doesn't have 20 years of increased dividends. So we're not even going to bother with KVUE, all right? Yeah, okay. AEO. Now, I actually have some AEO. That'd be a good one. Comcast. Come on, Doc. Like one at a time, dude. CMCS. CMCSA. All right. Let's take a quick gander at Dollar General first, okay? I'm greedy. Well, anyway, I'll be giving you a call from Florida tomorrow once I get down there. Set up a time for me and the grandson to come visit. See the cows. Doc has cows, everybody. All right. A year ago today, check it out. Here's the high of the year right there. And that was 217.64. Bottomed out at the middle of October at 101.35. So we know where the high is for the year, and we know where the low is for the year. Okay, look at where it is right now. Okay, it's not the high, it's not the low, but it's kind of like somewhere in the middle. That's where I like it to be. I like to turn, go back up to the upside. So let's see. Last 90 days. Okay, 90 days ago, 133.39. 133.39. 90. That's 3 months ago. Okay, 133.39. Now, the bottom for the 90-day period was 130.32. Okay, the top, the bottom was middle of February. Middle of February. Alex Moran, how you doing today? Asshole aficionado. Interesting name, dude. All right. The high for the 90-day period was 168.07, and that happened in the middle of March. Okay, so last 30 days. That's the most important one I want to look at. What is the last 30 days? Okay, gives me an idea of where the stock's going to go in the next couple of days. All right, 30 days ago today, Simone, how you doing today? 30 days ago was the 30-day high. Check it out, 30-day high 30 days ago. Look where it is now. Wednesday. Wednesday was the 30-day bottom. Okay, Thursday and Friday were a little bit to the upside. Okay, great. Dollar General looks good here. It's like the 1-year chart looks good, 90-day looks good, 30-day looks good. Carl, what software are you using? This is not software. This is a trading platform, Thinkorswim, through Charles Schwab. So you go down to Charles Schwab, open a trading account, and you can download this onto your computer for free. Okay. Fascinating football fans. I know fascinating football videos there a second ago. Paramount removed from Buffett's list. Are we done with that one? Not yet. Because some of us still have Paramount. I still have Paramount. Carl, you're welcome. All right, so let's take a look at the seasonality, because we like I like the 1 year, I like the 90-day, I like the 30-day. Okay, all three charts so far looks pretty good. I shit the bed last night. Hollyweed, alrighty. DB, that Dun & Bradstreet. Marvell. We'll take a look at Marvell. MRVL. WBD. You guys do realize I cannot possibly look at all these tonight. Okay, can't do it. ETH. Okay. Most of these I've never heard of, but let's keep on moving forward. All right, so seasonality. What does a stock normally do this time of year? Okay, that being said, what does it look like? Don't look good. Day 99, how you doing? Electric boats and ships, I'm wondering. Oh, cool. All right, this don't look good. Check it out, Dollar General. Okay, now, I do have to let you know, seasonality is not always correct. That's just what it has done over the last 10 years. Doesn't mean that's what it's going to do again. So what we're going to take a look at is we're going to take a look at the trend. They have that old saying, the trend is your friend, right up to the end. So we take a look at the trend. Look where it's going. Hey, David Helms, how you doing? Take a look. Up to the high, we're down to the low. Thursday was the low. Friday was higher. And Thursday was higher, and Friday was higher. I would like to see a higher. Oh, look at this. I do have it written down and circled. Okay. I would like to see it opening up a little higher on Monday, tomorrow morning. Okay. And if it does, let's take a look. 137.50. Okay, the 137s are going for 226. So let's get out the calculator. Okay, if I can buy it at 137.50, the safest bet is the 137. Okay, take that 50 cents right off the top. Okay, so clear this out. 226. And subtract my 50 cents off of that because we're losing 50 cents right off the top. If I buy it for 137.50 and I sell it for 137, I'm selling it for 50 cents less than what I paid for it. So why would I do that? Well, because the premium I'm collecting is 226. Okay? Now, my profit is going to be 176. Now, I know it doesn't sound like a lot, but I'm only looking to gain 1%. That's it. So I take that 176 profit up here in the calculator, okay, that thing right there, and I want to see what the numbers look like. So I'm going to divide it by the purchase price, 137. Now, why 137 instead of 137.50? Well, I've already subtracted the 50 cents that I'm already losing. Okay, so I'm buying it at 137.50. I'm selling it for 137. Roscoe, can you look at the intrinsic value to see how much you are losing off premium? Roscoe, I don't have to. Okay, because if I'm buying it for 137.50, okay, and I'm selling it for 137, that's 50 cents intrinsic value. Okay, but you're deducting that from the profit. Remember, the profit is 226. So what am I going to make next week? 1.28%. Hello from New York, Mexi. How you doing? Mexi Tracho. Mexi Cachacho. I think I don't know how to pronounce that one. Sorry, dude. Just doing the best I can. Okay, so 128, 1%, 1.28% for Dollar General. If I was going to buy it tomorrow at 137.50, sell someone the rights to buy it from me at 137, which is less than what I paid for it, but I'm still making 1.28%. SBSI, Roscoe, I'm not even going to be able to get to it, dude. Seriously, look at all the ones. See, I am right here at the moment. I'm right here, so I have all these to do, and then I started another list here, which means I'm not going to get to them all tonight. Just ain't no way it happened. Emily George, thank you for showing up. All right, so Dollar General does look good for tomorrow. Plug power, Jim, I have no idea what that means. Okay, love to be able to help you out. No idea. Okay, Intel, next on the list, INTC. Now, just for you guys to know, I do have some Intel. Terry Smith Sr., how you doing again? Intel, INTC, 30.90. Okay, so if it's going for $30.92, right? If I buy it tomorrow morning, okay, this is the bid and the ask. What you can buy it for, what you can sell it for. If I buy it at $30.92, the closest strike price is going to be the 31. Okay, and that's paying 37 cents. And we looked at this already. Symbol, plug. Oh, I've never heard of plug before, Jim, but I'll write it down. We'll take a look at it, but we're probably not going to get to it today. BLUG. Okay, reason being, look at all this. Okay, I'm up here. I got to do all of these first and then come over to this list. Okay, it's going to take a while to get to it, Jim. Sorry. Okay, so we're looking at Intel. I like Intel. I actually have some Intel. Look at, okay, we already looked at the numbers, so the numbers work. We're looking at 1% or more already, okay? If I can buy it at $30.92 and sell off the 31s, that's over 1%. And that's what I'm looking for. Safe, predictable, consistent 1% per week. It fits my parameters. And I like Intel. All right, so here we are, the bottom of the year, the high, the low, where was it, and where is it? That's the first thing I want to see when I look at a 1-year chart. The high, the low, where was it a year ago, and where is it now? Okay, so let's take a look at those numbers, see what they look like. A year ago, we opened up at 31.38. Isn't that weird? A year ago, 31.38, and what is it at now? 30.92, pretty close to 31. Okay, the bottom of the year was the end of May. Okay, and that was 27.01. The high of the year, which towards the end of the year, volume was higher. Hey, Mr. Jim. All right, Jim, I don't know what you're talking about. Is that website behind you TD Ameritrade? It used to be TD Ameritrade, but they got bought out just recently by Charles Schwab. So it's now Charles Schwab's. The high of the year, 51.33. What do you trade? I trade dividend stocks for weekly cash flow. Safe, predictable, consistent 1% per week. All right. Now, the last 90 days, here we go, 90 days ago today. Okay, here's the high, here's the low, here's where it was, here's where it is. Okay, now, 90 days ago, we opened up at 42.70, got a double high at 46.63. Once on the once on the 4th, and once on the 8th. Sup, Mickey? Hi, Saucy. Okay, interesting. Guys talking to each other, why not? Okay, so the bottom of the 90-day period was the 1st of May. Okay, that was $30.02. Okay, so I want to take a look at the last 30 days to get an idea where this thing's going to be going. Well, what did that tell you? 30 days ago was a 30-day high. Wednesday was the 30-day low. Didn't we just see something very similar to this? Dollar General almost looked the exact same. 30-day high 30 days ago. Wednesday being the 30-day bottom and 2 days to the upside. And it gives over 1%. Well, what is the seasonality looking like? Again, a little to the downside, just like, so you get Intel and Dollar General both looking the exact same. What is that we are looking at? All right, Everbless. This is a seasonality chart. What is a seasonality chart, you may ask? Well, let me look at the whole thing. Okay, January 1st, December 31st. The blue line represents the movement of this year. The red line represents 10 years average movement. Okay, so I want to see what does it do with the first 2 weeks of May. So here's May right here. January, February, March, April, May. I want to go up here and see what does it normally do this time of year. And basically, this thing's going to go from here. It's going to dip by the end of the week, and then the next 3 weeks going to go to the upside. So here's a question you ask yourself. If Intel's going to give me more than 1% this week, okay, what does next week look like? Well, let's see what the numbers look like this week. Okay, the 31 is going for 37 cents. All right, so 37 cents, clear that, 0.31. We divide it by the purchase price, 30.92, and we come up, try that again, 30.92, and we come up with a total of 1%. Okay, isn't that what we're looking for? 1%? So here's the question you need to ask yourself. Do I know the stock? Oh, the stock, Intel, INTC. Okay, INTC, which is Intel. Now, we all know Intel's been around for for quite a while. Oh, look at this, we only have 100 people here. Ooh, we got to share, like, share, subscribe, all that kind of neat stuff. So, are stocks better than indices and Forex? All right, Aiden, it really depends on what it is you are looking to do. I am retired. Okay, I want a safe, predictable, consistent 1% per week. And I don't want to sit in front of my computer all day. Indices, you just buy them and let them get whatever they get. What are they averaging in the last 100 years? 10% maybe? Can you go over NAS 100? Probably not. Okay. Sorry, Rich. Forex. You got to sit in front of your computer all day looking for setups, and you have to. And Forex is basically driven by news. How long have I been involved in this type of investing? Lucy, lovely. Ooh. You know what? I usually keep it open because people always ask that question anyway. Okay, that video right there is me doing the exact same thing 12 years ago. My daughter, who you saw earlier, right here, she's the original 10-minute trader. She wanted to learn what daddy was doing. So she wanted to, hold on, let me go back to the right screen. Oops, the right screen. This one. Okay, fix this. Hold on, I'm not ignoring you. I'm just going to right screen. Okay, not 20. I've been doing it for 20 years, but this particular strategy here was created for my daughter back in 2008. It had to be simple because she was only 9 years old at the time. It had to be safe, predictable, consistent, and no way to lose. So you have that 5 criteria right there. I needed to come up with some very good rules for her to follow. Rule number 1, never buy something you do not want to hold long term. That's rule number 1. You never, ever, ever sidestep rule number 1. Okay, never buy something you don't want to hold long term. Okay, the idea is to buy something that you actually understand, that you know, and you're okay with owning. What does that mean? That means never buy something you don't understand. Okay, don't ever buy something you don't want to hold for a long period of time. Number 2, never sell for a loss. Never sell for a loss. Number 3, 20 years or more. 20 years or more of increased dividends. Number 4, weekly options. And number 5, make sure the numbers work. What do I mean by that? Well, I want to invest for a safe, predictable, consistent 1% per week. So I have to look for companies such as this one. We just looked at 2 really good ones, Dollar General and Intel. Both had over 1% for tomorrow. Yes, weekly options, Zach. So if I buy Intel tomorrow morning, here's the price right here, the bid and the ask. The ask is $30.92. Okay, if I buy it $32.92 and I sell it for $31, yeah, I'm selling for a little bit more than I paid for it, but I'm also collecting more than 1%. How did you know then that they were good choices? Oh, what do people mean by use 2 or 1% of your portfolio? Okay, so options plus dividends. Yes, right, Zach. All right, let me answer those questions one at a time, of course. All right, Lucy, here's a question for you. How did you know then that they were good choices? Well, here's the thing. I only invest in companies that have 20 years or more of increased dividends. How did I find that out? Well, there's a list of stocks called the Dividend Kings. Now, the Dividend Kings have increased their dividends to their shareholders for 50 consecutive years. So 20 years ago, they were still paying their dividends and still increasing, and they're still on my list today. List number 2, the Dividend Aristocrats, 25 years or more of increased dividends. The Dividend Champions, 25 years or more of increased dividends. The Dividend Contenders, 10 years to 24 years of increased dividends. So those 4 lists right there will give you well over 300 companies to take a look at. And then you decide, do you like that company? Does it have weekly options? Because remember my criteria. This is my criteria. You guys have to make up your own mind. Don't ever listen to what I say. Okay, I'm just showing you the numbers. This is the chart. These are the numbers. I'm just reading them and giving you my opinion on my personal strategy. You guys got to come up with your own strategy. But here's the thing. Okay, I like a safe, predictable, consistent 1%. So I buy the stocks before the dividends paid out. Why? Well, because the stock has a tendency to go up before the dividend. Okay, historically speaking, Historically speaking, the stock moves up before the dividend. And that's all stocks do. Stocks go up, stocks go down. Let me just come back on that. All right. All right. See, beginning of the year, January, she dropped down to the end of May. She went up, came back down, 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 went up a little bit back, went up, back, up, back, up, back, up, back, up, back. That's all stocks do. They go up, they go down. You can only have one high of the year, right there, and you can only have one low of the year, right there. Okay? And then when you go to the 90-day chart, okay, here's the 90-day chart. Well, there you go again. What does it do? Comes down a little bit, goes up. Comes down a little bit, goes up. Comes down, up, down, up, down, up, down. And that's all they do. They go up, they go down. That's it. The idea is to buy it when it comes down, okay, and sell it as it's going up to collect that 1% per week. Now, I look at stocks, to buying the stocks, based on the calendar. That's it. Based on the calendar. I take the list that I've chosen over all these years of trading and I put them into the dividend calendar. Each one of these green dots represents a good company that I have looked at, that I have chosen, that I personally have no problem owning for a long period of time. Well, I buy it with the intention of holding it for a long period of time. Why? Well, because each one of these companies have increased their dividends for more than 20 years, so I have no problem buying them. If the stock goes down, I get higher and higher dividends every year. I mean, isn't that why we invest in the first place? All right. Second, stocks have a tendency to move up just before the EX date. These little dots represent the EX date. So if the EX date for Johnson & Johnson is right here on the 20th, I want to buy it 2 weeks prior to, which would be the week of the 6th, 7th, 8th, 9th, so on and so forth. I'll buy it on a Monday, okay? And when I buy it on a Monday, I will immediately sell somebody the rights to buy it from me for the exact same price or as close to the exact same price I possibly can with a covered call. It is one of the safest trading strategies there is. Now, take notes, do some research, find the answers yourself. But look at the stocks. Are they good companies? Well, let me read some of them to you. Kinder Morgan, Citigroup, Intel, Ford, IBM, Pfizer, PPG, Siri, Wells Fargo, Walmart, Apple, Capital One Finance, UPS, US Steel, so on and so forth. I have like 6 lists, and I look at about 300 stocks, but I don't look at 300 stocks all the time. What I'm going to look at this week are just these. That's it. Okay? That's all I'm looking at this week. Just those stocks. And if one of those is good, I'll buy it. Now, I've only sold 2 stocks this past week. So it means I'm only picking up 2 more stocks. So out of all of those, and hold on, don't go anywhere. And all of these, okay, 2 different lists, okay, between all of these and all the other ones, I'm only picking up 2. So the other ones is kind of like a pointless endeavor, but I do it anyway to show people that are following me. And I do have quite a bit of followers that, wanting to do this kind of stuff. All right, let's go to another question. What do people mean by use 2 or 1% of your portfolio? Dude, I couldn't tell you what they mean by that. Okay, I stop listening to what other people say and I do my own thing. Why? Well, because I find that if you want to go along with the crowd gets an average of what, 3 to 8% per year on their returns. Fine, you want to go with the crowd? Great. This is totally off the charts. Okay, you would have money managers and financial advisors cringing. What do you mean you're doing that kind of stuff? It works for me. Okay, and you need to ask yourself the same question. Find a strategy. Don't go with the flow, because what has going with the flow gotten you? That's funny. What has going with the flow gotten you? And if you want to get better than you're getting, go along with the non-flow. I know it sounds weird, but just because everyone else is doing it doesn't mean it's right. Stocks for a 1% weekly goal All right, strategy, willing. Okay. Can you please repeat your list again? Sorry, John. You just have to keep coming back. And John, you've been here for a while, so you should know some of these stocks. And you should also know where you can look them up. Is GME meme stock worth getting into or stuck with dividends? All right, Winsanity. I don't do any stocks that don't have 20 years or more of increased dividends. Now, if you see this list right here, see, I'm bringing it really close. See? Okay, all those stocks. Look at how many I have circled in the top left corner. Okay, those out of all this crap you guys have me look at, these are the only ones that actually look good. All right, so for the most part, you guys have me look at stuff that I don't buy and I don't look at. But I'm doing it for you guys just to show you. I'm going to actually do a video one of these days like, what were you thinking? Because some of the stuff you guys label off is just, in my humble opinion, is crazy. So you buy, sell, and dip. Affiliate for profits. Ooh, affiliate, you need to DM me. I actually have an affiliate program that I'm working on. It'd be nice to get your point of view. All right, so the buy, sell the dividends, earn are all done within one single week's time. In a perfect world, yes. Does it always happen? No. Okay, this week, as a matter of fact, 1, 2, 3, 4, 5, 6. All right, I have 6. Wait a minute, I had 7, so I only sold 1. So I'm only picking up 1 new stock this week. That's it. So out of all those on my top list corner and my lists, I'm only picking up 1 this week. No dividend is announced by each individual company. He sells covered calls. Thank you. That's correct. Thanks, 86. Always count on you guys. Moderator. Unpinned a comment. Do you hold them long term? Okay, Jamari, just to let you know, the longest I have ever held anything. Now, I've been investing for over 20 years. This particular strategy for 15 years, okay? Because I didn't know this strategy even existed until my daughter wanted to learn how to trade. So I had to come up with something which she could grasp, okay, and she could never lose. Okay, so never buy something you don't want to hold. Never sell at a loss. Make sure it has 20 years of increased dividends, okay, weekly options, and make sure the numbers work. Ever since I came up with that that 5 criteria and those 5 rules, I've been using this strategy because it gets 50% per year. Now, I do have other trading strategies that make more than 50% per year, but I don't share those for free, okay? I'm a nice guy, but I'm really not that nice. All right. Mo joined. Way to go, Mo. Way to go, Mo. How do you hold them long term? Okay, so answer your question. The longest I've ever held anything, okay, was last year. I held on to Kimberly Clark for 9 months. 9 months. What does that mean? It means I collected 3 dividends and I collected almost 30 premiums. 30 premiums and 3 dividends I collected from PPG last year. Just PPG. All right. Well, no, not PPG. Sorry. Kimberly Clark. So I had 3 of them that kind of set me back. Now I held Kimberly Clark for 9 months, PPG for 6 months, and Target for 6 months. So those of you who've been here for a while, you know what I did with Target. I was like, oh. Okay, what do you think of TD Bank? I honestly couldn't tell you because it's not at the top of my list, number 1. TD Bank is a monthly, okay? This right here, this is your option chains, okay? Now, here it says 17 May, which is May. Then it goes 21 June, 19 July, 20 September, 18 October. It's monthly. Why don't I like monthlies? Well, I don't like monthlies because there's only 12 of them, which means I can only get 12 checks per year besides the dividends, because the dividends are by themselves. 12 option checks per year. But with weekly options, it's 52. And if I get 52%, if I get 1% every week, that's 52% for the year. That's why I like weeklies and I don't like options, because the numbers just don't work. I mean, don't get me wrong, you can get between 12 and 24% doing monthlies, but I have no desire to hold on to something that long. Oh my God, did you see that? I didn't even look at that. Look at that big, huge drop on Friday. Okay? If you like TD Bank, I would find out what happened there. And usually, when it drops like that, okay, it usually bounces back up. So you can catch a quick little bounce up tomorrow. Okay, Blitz. So, if you sell 3 stocks, then you only buy 3 stocks. So never buy more than what you sell. All right, Blitz, I'm not 100% sure I understand that what that comment was. Okay, so maybe this might help. Okay, I have 6 different accounts. I share 2 of them with you guys. Okay, you guys can look at my 2 accounts. They are right here. Okay, the 10-minute trader. Okay, the10minutetrader.com. Slide all the way down. Here's account number 1 right here. Account number 2 right there. Okay, these are all my trades that I've done so far this year. So you can just look at the trades, do the math yourself. Okay, look at this one, 5 positions. Look at that. Whoops. You had ALB, Albemarle, Lowe's, Macy's, Bitto, and 3M. That week, week number 15, I got 4.4%. Woo-hoo! Always 1%? No. Okay, like I think week 3 and week 4, I didn't get 1%. Okay, week 3, 0.85, I didn't get 1%. Week 4, 0.9. Okay, week 4, I got 0.9%, which is not 1% less. But then if you add them all up, okay, look at this. Week 9, 2.3. Week 10, 4.6. Week 11, 3.9. Okay, week 12, 0.9, and didn't make it. But it averages out to well over 1% per week. Okay, let's get back to where we were. All right. TD got caught up. I'm in money laundering. Ooh, that's not good. Thanks, 86. Nice of you. I can always count on some of you guys. Thoughts on Drake Dis? Okay, I'm gonna let you guys know. If I give you that weird look, like, or one of those weird looks that you give me a stock symbol and you ask me about a company and I go, what? It's not on my list. Now, this 9,503, we looked on Monday, this past Monday, 9,503 companies available in the stock market to trade on a daily basis. 9,503. That's a lot. Now, I only look at 300. That's it. Why? Because those are the only 3 that actually, the 300 that make my list. Okay, and I rattled off some of the names to you. So where'd your initial investment money come from? Sean, I'm 60 years old, brother. You don't think I've been saving up all these years? Come on. Most likely people don't have more than a few grand. Well, Sean, I'm hoping by age 60, when you're starting to get ready to trade or are ready to retire, your money's sitting somewhere, either in a 401, sitting in an IRA, sitting in real estate in your home, we purchase. Because a lot of people my age, okay, the kids move out. They're called empty nesters. Kids move out, now you're in this big house with just the 2 of you, or the 1 of you, okay? Sell off the house and you go to downsize. What do you do with all that money? Well, you put it somewhere, okay? It's drilled into our head from elementary school. Get a good education, get a good job, work 30, 40 years of your life, put some money away for a rainy day. Well, I'm 60, it's rainy day. So the money that I have set aside for my trading is my retirement account. That's what I live off of, 1% per week. Okay? How do people join the team? John Doe, you've been here for a while. You should know that. Hold on, I'm going to get to there. I'm missing these questions. Buffett disposed of Paramount. Yep. Wanted to. Hold on a second. Sean, where'd you get? All right, where did you do that question? Where'd I get my capital? Now, my grandson started out his account with $50. Okay, now there are ways for you to trade with a smaller amount. It's called dividend capturing. Okay, which means you just buy the stock before the EX date, capture the dividend. Once you get the dividend, you sell at a profit, and you move on to the next one. It's safe, it's predictable. Okay, here's a good one for you. You ready? Stocks move for two reasons and two reasons only. A known reason, that means you know what's going to happen. You know something's going to happen. Or an unknown reason. That means something you don't know, something you can't plan for. What are those? Well, do you remember when in Palestine, Ohio, that railroad incident? Okay, well, the stocks go down? Well, probably they did. Okay, what about when BP sprung a leak in the middle of the Gulf of Mexico? That stock dropped. What about when the Exxon Valdez crashed up in the was it Puget Sound in the northwest United States? That stock dropped. What happens when with a big huge earthquake and shuts down a factory, or when Steve Jobs died? Did the stock go down? Those are unknown events. They just happen, and then you have to react to them. Okay, fine. What is a known event? Well, a known event, well, we all know what those are. Dividends, earnings, okay, stock splits, product announcements. Okay, when they announce a new product, like Apple does every year, Apple goes up every year. Well, consistently. What about Weight Watchers? Weight Watchers goes up the very first couple weeks of January. Why do you think that is? Oh, how about Hershey's chocolate? Goes up in the first weeks of February. Why do you think that is? Okay, you have Valentine's Day and you get Easter right around the corner. Hershey stocks goes up the first week of February. You have what's called seasonality. Because when we all know what seasonality is, you may think you don't, but you do. Okay, winter, spring, summer, fall. Now, do different companies react differently to different times of year? Yes, they do. When it's cold out in the up north, we're burning a lot of oil. Oil stocks go up. Okay, in the summertime, okay, when there's no need for heating oil, the stocks go down. Okay, other companies do the exact same thing. So let's look at a few more of these questions. Bymium, thoughts on Drake? Yeah, we already said no to Drake. Sean, so where did you get the initial investment? Okay, I already did that one. All right, John Doe, how do people join the team? Okay, so right up here in the bio, you'll click on that, my little link up there. It goes the 10-minute trader, okay? You'll land right here. This is the landing page, the 10-minute trader. Slide down, first video gives you a rough idea, basically what I'm saying right here. Second video explains the no risk strategy. Okay, right here. Trade live online every morning, Monday, Tuesday, Wednesday, Thursday, 9 a.m. until about 10. Okay? Now, you're going to look over my shoulder as I trade my accounts. Okay, so you actually get to see exactly what I'm doing. Then, after I'm done with my trade, you can ask me any questions you want. I will walk you through how to do it. I cannot tell you what to do, and I will not tell you what to do. Okay, I will just help you out, and I'll ask you questions that you may not have thought of. Okay, like number one, never buy something you don't want to hold. Never sell at a loss. Make sure it has 20 years of increased dividends, and make sure it has weekly options, and then check the numbers. That's very important, checking the numbers. Okay, that was TD. Next on the list, JFIN. Really? What the heck is JFIN? Usually when I say, what the heck is that? Yeah, monthly. Nope, not like, hey, Jim Andrews, thank you for that. Coco, I don't see it. All right, Coco, I don't see what you're talking about. DD. Is that DuPont? Yes, it is. DuPont. Ooh, look at that. All right, DuPont's going to be a no. Okay, why is DuPont going to be a no? Well, look at the chart. She gapped up. 30-day highs right here. You think it's going to go higher? Yeah, good luck with that. You have a 30-day high for a reason. Okay, that's as high as it's going to go because we are the buyers and sellers. We decide whether or not if it's too high or too low. Okay, this environment, nobody has investment money unless you're a boomer or lucky. Sean, I'm assuming you're not in your 60s or 70s. Now, I've just created this channel because I am retired. Okay. Now, if you don't have a lot of money to trade with, you do smaller numbers. Okay. Just do the dividend capturing. Figure out where your money is going every week. Okay. I have something called a weekly compound interest calculator, and I want to share this with you just for the fun of it. Now, for the most part, if you're not a baby boomer, and if you're not a Gen Xer, and you're not retired, then you have at least 10, 15 years worth of investing to do, correct? Okay, what you're seeing up here on the screen now, and for you guys who don't know, this screen is broadcast live on YouTube. So you go to your computer or your television, you can have to sit in front of your TV and watch this channel here on your TV. Okay, regular television. Okay, all right. Here's a weekly compound interest calculator. Let's say, Sean, hypothetically speaking, okay, hypothetically speaking, let's say hypothetically you start out with $100. Okay, $100. Now, let's say, hypothetically speaking, you put in $10 a week. Okay, hopefully, yep, stop going to Starbucks, quit smoking, don't buy name brands. Okay, go get generic brands. Have beans and rice a little bit more often. Figure out where you can pinch your pennies. Just figure it out. It's there somewhere. Okay, the new book I've written actually has weekly or monthly, what do you call them, budgets, or where's my money going. That's probably the number one thing you got to figure out. If you're having an issue finding money to invest, figure out where your money's going. Okay, because if you're working and you're actually contributing to society by working, your money is going somewhere. So let's just go back to this example right here. $10. Okay, I start out with $100 and invest $10 a week. Okay, now the next line down, interest rate. Okay, if I'm teaching you how to get 1% per week, we'll just put 1% in there. Okay, you deposit it weekly. Okay, line number 4 is weekly or monthly or bi-weekly, however you want to do it. Okay, and let's say just 10 years. All right, so $100 to start out with, $10 a week. You have to be able to come up with $10. I mean, if you're a working adult, you should be able to come up with $10 a week. This is just to give you a concept of what $10 a week over a 10-year period, starting out with $100 and getting 1% per week. Okay, going to compute the savings. In 10 years, that's $193,000, and your investment is $5,300. That's how the magic compound interest works. Well, how does this calculator work? Well, here you go. You take $100, you multiply it by 1.01, which is 1%, and you do that 52 times, and that's 1 year. And then you continue doing that 52 times for year 2, 52 times for year 3, 51. Okay, 1.01 multiplied by whatever your number is. 1, anything multiplied by 1 is the number. 0.01 is the 1%. Okay, so 1%, I'm bringing up my calculator right here. Clear that. $100, okay, see my calculator? $100 multiplied by 1.01. It's going to equal to, I didn't hit equals yet, it's going to equal to 101. See, 101. And you take that and multiply it by 1.01. Say, wait a second, you have to add the $10 because every week you're adding $10. Come on. I'm having an issue with YouTube over here. Okay, let's go back one. Hold on a second. Clear that. So $100. Okay, this is week 1, $100. Multiplied by 1.01. Okay, so at the end of week 1, you have $101. Okay, now week 2, you're adding your $10 in, plus $10 equals 111. Now multiply that by 1.01 There you go. End of week 2, you have $112. Okay, and you add your $10 equals that, multiply by 1.01, and week 3 you're at 123. It's really slow at first. Okay, but the calculator which created allows you to increase or decrease every week. If you start with $500 and you had $50 a week, yeah, it's going to add up a lot faster. Okay, if you only do 5 years instead of 10, yeah, the numbers are going to be different. I created this calculator to give people an idea. Mainly, I made it for my ex-wife. You're paying $5 a week for cigarettes. This was like 20 years ago. She's paying $5 a week for cigarettes. Now it's up to like $20 or $40 a week for cigarettes. Okay, yeah. So the number, this calculator gives you, it opens your eyes to actually what a dollar is worth. What the hell? Let's do this right here. Okay, $1. Not going to add anything to it. Okay, $1 over a 10-year period, just compounding at 1% per week. Just $1. Okay, 176.65. Your investment, $1. Okay, 176.65. Not a lot, but let's say you put in $1 a week. Okay, now I really like to think you can do more than $1 a week, but starting out with $1, $1 a week, 17,741. The calculator's cool. Just keep playing with it. But it's up there at the Hamburg right there to give you an idea how it works. There's also a monthly compound interest calculator also. Basically, if you're having issues figuring out where the money's going to come from, figure out where your money's going to at first. Reconnect over here on YouTube. Come on. Okay, figure out where your money's going. And then if you invest consistently, that's the consistency is the main thing. All right, let's go to keep some more questions. Edits, how you doing? Be smart, Lucy. Thank you for that. Budget, yep. Thanks, Lucy. I'm 23 and I invest 90% of my money while everyone parties and has kids. Blitz, that's an awesome idea. You keep doing that, okay? You keep doing that and you can probably retire in 5 or 10 years. All right, 5 or 10 years. Okay, I have no idea how much money you make, but if you, what do they call it now? Suffer now. So if you make your life hard now, just do nothing but invest all your money. Okay, in 5 years, you're probably going to be able to retire. At 28, that's unheard of. But hey, if it works, it works. Yep, Lucy Love budget. Where do you put that $100 a week to start? Oh, groceries and rent is insane right now. You're absolutely right. It is. Okay. I'm not going to disagree with you. Yep, it is for everyone. But if your reason for becoming financially free is compelling enough, you'll figure it out. Okay. If you have to get rid of your car, get rid of your car payment, get rid of your insurance payment, ride a bike to back and forth to work, take the bus, cut down on your expenses, figure it out. Okay. If it's meaningful enough for you, you will figure it out. But thank you. I want this for my future kids. Cool. Mo, do you make your money when the covered call option you sell expires? No, I make it as soon as I sell it. Okay, so as I was talking about, this is Double D. We're looking at DuPont. Okay, 78.92. Okay, 78.92 DuPont. 78.92. We'll be looking at the 79s. Ugh, 15 cents? What are you shitting me? Hell no. Let's go to Macy's. Okay. Macy's, 1976 to 20. Okay, let's look at Macy's. 1976. That's what I can buy for tomorrow morning. Okay, the 20. 20 is the closest. That will give me 31. The 1950s will give me 47. The 1950s is probably what I would go with because it's closest. Okay, if it gives me 1%. All right, so if I buy it first thing tomorrow morning, at 1976, right? I will sell at the exact same time. Oh, let me show you the trade. Let's go this here. Let's go to covered stock, and I like the 20s right there. Let's open this up so I can actually show you the trade. Okay, here's the trade right here. Okay, now let's say hypothetically you can't do 1,000 shares. So let's go down to just 100 shares. Okay, 100. Okay, so 100 shares is what, 1,900 bucks? Okay, hold up. Now, this is a double order. Okay, I am selling one contract. I am buying 100 shares all in one trade. Now, the $20 strike price right there, the call, the stock, what I'm paying for it, and it's a limit order. Okay, so I like to do market orders, that way it fills instantaneously as soon as the market opens. But let's take a look at what the return is. Okay, now here, when this little window opens up right here, it says buy one covered 100, which is the weeklies, 10 May 24th. That's this Friday coming up. Macy's, call Macy's. So I'm selling the call and I'm buying Macy's at the same time. Okay, now my maximum profit is $81. Now I know $81 does not sound like a lot of money, but let's do the math. Because out of everything in this universe, math is the only constant. There's only one right answer. 1 plus 1 equals 2, no matter where you come from in the galaxy. 1 plus 1 equals 2. All right, so let's get rid of this. My maximum profit right there says 81 bucks. Now, how much did it cost me for that trade? That trade cost me $1,919. Okay, so I'm going to divide it by $1,919. And that's going to give me a grand total of, are you shitting me, 4.2%? That's nice. Okay, there's the numbers right there. Okay, I'm getting 81 bucks on a $2,000 investment. Is that right? Let's do it again. $81 on a $2,000 investment equals, yeah, 4%. Holy shit. But here's the question. Okay, and this goes back to that rule. Rule number 1. Do you like Macy's? Do you want to own it for a long period of time? What if it drops? Okay, what if Macy's goes down? Therein lies the rub. Now, Macy's is a dividend king. What does that mean? That means they've been in business for over 100 years. They have increased their dividends to their shareholders for more than 5 decades. That's 50 years. Some of you people here in the audience haven't even been alive that long, and Macy's is continuing increasing their dividend payments to their shareholders. So as soon as you buy a stock, you become a shareholder. However, let's take a look at the chart just in case. Let's get out of that. 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 Now, let's take a look at the chart for Macy's. Where was Macy's a year ago? Right here. Okay, the high's here, the low's here, it was there, and now it's here. Okay, so we're not at a high of the year, and we're not at the low of the year. We're somewhere in between, which is where I like to be. Okay, now, a year ago, Macy's was at opened up at 15. Okay, the bottom of the year was in the middle of October, and that was $10.47. Now, it ended up the year at $20. Okay, last 90 days, right? There we go. Okay, 90 days. This is 3 months, 90 days. Here's the high, here's the low, here's where it was 90 days ago, here's where it is now. Do you see a pattern? She goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down, goes up, down, up, down, up, down, up, down, up, down. Okay, that's all it does. Goes up, comes down, goes up. So the idea is, okay, for Monday morning is to buy it when it's going on the upside before it hits the top. Okay, and only go for that 1%. If you go for more than 1%, you might get stuck. Okay, that's why I only do 1%. But here's the thing. 1% a week is 50% a year. And if you're okay with 50% a year, why the hell not do it? All right, so let's go through the numbers. 90 days ago, we opened up at 1827. Okay, the bottom of the 90-day period, was 1712. Okay, the high of the 90-day period, 2210. So we know where the high is, we know where the low is. All right, here's where we are now. Okay, let's go into that. 30 days ago, right there. Okay, now, first thing I want to see, where's the high? Where's the low? Where was it 30 days ago? Where is it now? Now, I love the 30-day chart. This is what I use the most. Why? Because it gives me an idea of where it's going to go in the next 5 days. Why 5 days? Well, Friday is 5 days away. Okay, if I buy it tomorrow morning and I sell the option, I want to have some kind of idea where is it going to be in 5 days. It's not that difficult to find out. Okay, so here we are. She goes up. Here's your 30-day high. What happens on a 30-day high? Most of the time, it's going to be profit taking. There can only be one 30-day high. Okay, profit taking came down to here. Went up a little bit, came down to here. Went up a little bit, came down to here. Went up a little bit, came down to here. Here's where we are now. 2 days to the upside, Thursday and Friday. More than likely, okay, this is not guaranteed, but more than likely, it's going to go to the upside come Monday. Is that guaranteed? No, it's not guaranteed at all. Okay, in fact, look at the seasonality. The seasonality, what does this normally do this time of year? Well, okay, the blue line represents this year. Okay, the red line represents 10 years worth of data. 10 years. Okay, she channels a little bit, drops down, picks up, drops down, picks up. Here's where we are right now. Okay, the second week of May. Okay, so let's zoom into the second week of May, and I want to go right there. This is what I want to look at right now. This is the next 2 weeks. Okay, she's going to dip a little bit. Okay, she's going to dip a little bit, and then she's going to go back up. Based on historical performance. Does that mean that's what it's going to do? No. That means that's what it's done over the last 10 years. She dips down a little bit this time of year, and then she goes back up again. I'm perfectly okay getting 2 or 3 or 4% from Macy's, holding it right to here, selling another covered call here, and then taking that right up there. But that's me. You guys have to ask your own question. Ask yourself that question. Do I like Macy's? Do I want to own Macy's? This is most important. Does this make sense to me? Okay, does it make sense? Sounds great, but most people are having trouble with skyrocketing cost of living. Scorpio, you're absolutely correct. All right. Who can make 1% a week? Well, Griffin, I make 1% a week, and there's about 10 or 15 people here on 10 or 15 people here in the chat right now that make over 1% per week. All right. Winner 86, he's doing it. You could ask him. Squidward, I buy clothes from Goodwill and often eat beans. That saves me a lot of money. Well, Squidward, I buy my clothes at Goodwill too. Okay? I mean, I travel a lot because I have places up here in Massachusetts. I have places down in Florida. And I have a place up in Maine. I actually have clothes everywhere. I do. When I fly, I carry just a small bag. Go to my kid's house, I actually have a bureau with some of my clothes at my kid's house because I travel light. Okay. Say I have 100 grand. What would an example trade look like? Well, first of all, Griff, if you have 100 grand, I would do either 5 or 6 positions. 5 positions would be 20, 20, 20, 20, 20. Okay, that's 100 grand. Okay, so hypothetically speaking, let's say $20,000 worth of Macy's. Why? Well, I like Macy's. I actually have Macy's in 3 of my accounts. Okay, so let's take a sample look for Mr. Griff. Okay, so 20,000 divided by, because the purchase price right there, 1976, divided by 19.76 gives me a grand total of 1,000 shares. Okay, 1,012 shares. So let's keep it 1,000 shares, even. Okay, now I want to go back to spread trade right there. I'm going to click on that. I want to open up covered stock. Okay, now I already said I like it at 1976. Okay, I want to do the 1950. Okay, why? Well, because the 1950 is 25 cents in the money. The stock doesn't have to do anything. It can stay exactly where it is, not move at all, and I'll still make my money and be back into cash next week. Not tomorrow, but the following week. Be back into cash. And that's my ideal thing. Buy on Monday, be out on Saturday. Why Saturday? Well, because options actually expire on Saturday. That's when all exchanging does. Okay, so let's take a look at what the trade would actually look like. James, check the premium again. Not sure. 81. Huh? Hold on a second. What is this guy saying, Danny? The 1950 is going for 47 cents. The 20 is going for 31 cents. Did I do 81 cents on that one? Cold. All right. Let's take a gander at it again. Okay. So 1976, let's do the 1950s. All right. So go to covered stock, do the 1950s right there, 1,000 contracts. 10 contracts, 1,000 shares. Okay, that should be a little bit less than 20 grand. Do it at the market. There you go. Confirm and send. Okay. My profit, $515. That's my profit. Okay. Now I'm going to divide that by my purchase price. Okay, which is right there. See it? My purchase price, $18,985, and that will give me a grand total of 2.7% return. Okay, 2.7% return. Now, let's say hypothetically we want to go one more strike in the money and do the 19. Okay, we'll see what that one looks like. Delete that. Come on, delete. Here we go. Let's do the 19s. Okay, now I want to hit market. That doesn't look that good. That means I'm getting 3 1/4. Whoops. 3 1/4 my max profit. See right here, the numbers, 3 1/4 max profit, and it's still costing me 18,000 divided by 18,675. Okay, that's 1.7%. Okay, so let's take a look at this for a second. I can go 3 strikes in the money. What does that mean? Well, single right there. Right now, 1976 is what the purchase price is. 1976. At the money, which is right here, the 1950. If I go 3 strikes in, 1, 2, 3. Okay. Oh, wait a minute, 2 strikes in, the 19s. Okay. Why would I do that? Well, if I'm buying it for 1976, if the stock goes up, I make my money. If the stock stays the exact same, I make my money. The stock can even come down and I'm still making my money. Well, how far down can it go before? Where's my break even? Okay, my break even, what the hell was that? My break even is at 1868. It's at 1952 at the moment. Okay, the last trade right here. Last trade, 1952. The bid, 1946. The ask, 1976. So first thing Monday morning, I buy at 1976. My break even is 1868. So anything below 1868 come Friday is break even. Well, I start losing at the 1865, 1864. Then I start losing money. But I never lose unless I sell it for less than what I paid for it, which is not what I intend on doing at all. All right, Griff, you like that one? Eat it. Oh, I missed the. I keep missing some of these questions. What do I think of Blackstone? I don't. Has Blackstone been increasing their dividends for 20 years or more? Okay, let's go back to here. Single. Oops. Yep, single. All right. All right. So DD, which is DuPont, was a no because the numbers just didn't work. The numbers on Macy's looks good. Yes, it does, Austin. That's why I have Macy's. All right, James, check the premium again. Not sure. It's 81. It's not 81. Okay, it is 31. Okay, I may have made a mistake, but it's 31. That's at the $20 strike price. But if I'm going to do it, I'd go for the 19s. But that's me, because you're 2 strikes in the money, and the stock's just going to stay where it is, or go up a little bit. It doesn't have to move at all, and I'd still make my money. There was a buyout rumors on Macy's. Are you owning it on the possible buyout offer? The buyout offer was already placed, and it was already rejected. Because I think that was when it was around 24. Because I think I was in it at 20 a couple of weeks ago. And then they had that buyout rumor. That buyout rumor was, okay, we want to buy you out. And Macy's said, oh, hell no, we'll buy back our own shares at 24. So whoever was taunting them for the buying backed up, apparently. Griff, all right, cool beans. Monterey 86, pin a comment. When is Macy's dividend date? Ooh, let's check that out. M. Well, it's not in May. June. There it is. It's the middle of June. Okay, so we're in, what week we in? Week 5, week 6, something like that for the quarter. I think it's week 18. Week 18 for the year. But this is the second week of June that they have their dividend. Okay, is what it is. I have no problem holding it up to the dividend. You just added on the capital appreciation. Yeah, Roscoe, I don't go for capital appreciation, but if it happens, it happens. It's not my main focus. Alrighty, next on our list, EL, Estee Lauder. I'm sure some of you heard of that one. And it's the upcoming June dividend hasn't been announced yet. That's correct. Jaxie is a no. So you buy the shares, sell the calls at the same time. Do you sell the share? No, Dan. You buy the shares. You own the shares. When you sell a covered call against those shares, you're giving somebody the option to buy them from you from a certain time by a certain date. So I do the weeklies, okay, which means this option expires on Friday. Actually expires on Saturday, but you can't trade on Saturday. So ideally, you have to do something. If you're going to buy it, you have to do something between the time you buy it and the time you sell it. Figure out what you want to do. But me, I jump in on Monday morning and I make my sales first thing Monday morning. That way, I'm collecting that premium in my account on Monday morning. Okay, I hope that makes sense. And I don't sell the shares unless the stock is higher. Okay, so if I sell the 20, if I buy it at 1976, okay, I sell somebody the right, not the obligation. It's kind of like a non-refundable deposit, the premium. I collect that premium instantaneously. Okay, that goes to my account. I can transfer it to a debit card and I can spend it. Okay, I can sell it tomorrow morning and buy coffee with it by the afternoon. That's how that works. If I sell the 20s, if the stock is above 20 on Friday afternoon, the following Monday I'll be back into cash, which is ideally what I want to do. And then I do the whole thing all over again next week. Now, if you remember the calendar, right here, I look at these stocks this week. Next week, I'll look at those. The week after that, I'll look at those. The week after that, I'll look at those. Okay? I don't look at the same stocks over and over and over again, except for a few like Macy's, Nordstrom's, Walgreens, because they pay freaking awesome premiums. Okay? If they continue to give me higher premiums every week, I'll keep doing them. I don't care. Because I like Macy's. I have no problem holding on to Macy's. Thank you, Edits. Interesting. I thought he only bought for the dividend. No, I don't buy for the dividend. Okay, I only use the dividend as an indicator as to when to look at the stock. Okay, 2 weeks before the dividend. So STX is right here on the 20th, right? That's STX. I will go 2 weeks before STX, which is the week of the 5th. Okay, I will look at it Monday morning. And if the numbers look good and the premium's good and the charts are good, well, then I'll buy STX. I will collect that 1%. If I'm cashed out on Friday, I look at something else on Monday. But if I'm not cashed out, I will make another trade out on the following Monday. Okay, my goal is the 1% per week. Safe, secure, predictable, consistent 1% per week. Okay, more questions. I'll see you this week. I'll be here. Brian Spence, KHC. We're into week number 19. Cool. KHC is usually a no. Usually. Every once in a while, Heinz Ketchup will give me a good premium. Okay? 36.55. The 36.50 is only going for 23 cents. That's about 3/4%. So that's a no. You are correct. Usually does 2 weeks before the EX. Thanks, 86 expense. Did you make 1% last week? I don't know. Did I? Okay. Account 1, I got 2.6. Account 2, 0.92. Because I remember I had to buy back Albemarle. I lost a little bit of my premium on Albemarle. So yeah, I missed it on account number 2. I got 0.92%. I mean, I'm sorry, but last week, the week before, I got 1.63. Kind of makes up for it. The week before that, 1.65. The week before that, 4.4. Okay, so it evens out. I can live with 0.98. Or what was it again? 0.92, sorry. 0.92. That was AEO, Albemarle, Lowe's, Bitto, Walgreens, Marathon, and Macy's. That was 7 positions. Wow. All right, anyway. Back to here we go. KHC is going to be a no. Estee Lauder. That's what we're looking at. EL. Estee Lauder. 135.87. Okay, I can't really go by this one, so I really can't give you a good number on that one. Does wifey have the other phone today? No, it's right here, and I can't seem to log into Instagram because I logged out of Instagram to get into this phone. Okay, so this phone is not cooperating, so it's no Instagram today. Sorry. Okay, comfortably numb. I think because Warren Buffett never wanted to split the stock. Could be. I have no idea what they're talking about there. What rate of return you get yearly? Well, it's over 40. It's over. Well, it was I think it was 40% last year. 45% last year. That was my worst year in like 10 years last year. Average is over 60%. Mikey, where is week 17? I don't know. Your profit from selling covered call option counts as short-term investments. Yes, it does, Mo. Okay, but I see where you're getting at, Mo. Okay, and I'm going to tell you right here. Go talk to a tax strategist or a tax planner. If you're concerned about short-term capital gains, okay, if you're making 50% return on your money and you're worried about capital gains, you need to talk to not an accountant, not a bookkeeper, a tax strategist or tax planner to help you legally pay little to no taxes whatsoever. Because there are ways to paying little to no taxes whatsoever. New guy, WMB. Never heard of it, but I'll write it down, new guy. WMB. Now, WMB, probably won't get to that one until tomorrow night. Now, just to let you guys know ahead of time, tomorrow I'll be broadcasting from my son's house down in Florida, so I'll have a different setup. I'm not quite sure what the setup's going to be tomorrow night. Tomorrow morning, for you guys in the trading group, I'll be broadcasting from the airport. Okay, I'll be doing my trading from Logan Airport. Alrighty, dun-dun-dun. Boom, boom, dividends in his pocket. Damn. Okay, no, sir. Actually, he makes 1% from the premiums collected. Yep, that's correct. Edits, James, please check Pfizer EX dividends soon. Pfizer. Who does your eyebrows? Nobody does my eyebrows. I got stuck in a nail here. Over here, I almost lost this eye from running through the woods, and I got a cut right there. Lost that part of the eyebrow right there. Can you do someone a bit of tech background? Reverse your charts. I only watch you on TikTok. Dude, I'd love to be able to help you out. However, okay, see, check it out. If I do the regular, to make it look normal for you guys, okay, now, it looks normal for you here, but here's the challenge. I got a camera here, a camera here, a camera here, and a camera here. So, all the cameras are doing the exact same thing except for that one you just asked me to change. I have ADD and it drives me up a wall. So I have all the cameras doing the exact same thing. So you need to either turn your TV on, okay? Turn your TV on because this is live on YouTube, which you should be able to get on your normal TV. What are you looking to purchase and sell at the open? I don't know that yet. We will go that in the morning with the trading group, Tyler. Okay, what were we looking at? Oh, we're on Estee Lauder. Oh, okay. So I really can't give you good numbers on Estee Lauder. Here's why. Are you ready why I can't give you a really good answer? The last trade was 132.94. 132.94. The bid, 132.94. The ask, 135.87. Hi, my friend. I try to invest in stocks using ITIN number. I have no idea what that is. Did you miss my question? I think I did. What was your question again? How many times per year does American stocks pay dividends? Oh, that's a good question. They're all different. Some companies pay once a year. Some companies pay twice a year. Most pay 4 times a year. And there are even some that pay every single month. Okay? So they're all different. Most 95% of my, I think like 98 probably, 98% of them pay every quarter, every 90 days. Okay, so when I say I'll take the profit, see you again in 90 days, that means every 90 days. TSLY pays monthly. Yes, it does. I got one that pays monthly. Well, good for you. But do you get 50% a year on that monthly paying stock? What's your name on YouTube, please? Oh, The 10-Minute Trader. Hold on. Okay. The10minutetrader.com. And if you go to YouTube, my YouTube channel, okay, The10minutetrader.com. Oh, The 10-Minute Trader. Thanks. No options available on that stock. Yes, I know. That's why I don't do that stock. Okay, let's go back to where I was. Pfizer. All right, Edit, you want to take a look at Pfizer? We look at Pfizer already? Okay, Pfizer. July. Pfizer pays in July. April, May, June. Wait a second. April, May, June. May 9th. And actually, Pfizer is paying this Thursday. Okay, right there, this Thursday. Now, I very rarely do I jump in on the week of the dividend. Reason why is the stock usually goes down as the dividend is being paid. Hold on, let me take some of these questions. I missed some of them. All right, Pfizer. What happened to Apple? All right, hold on a second. We'll take a look at that one in a second. I'm watching your YouTube on my second monitor for the non-inverted chart behind you. Yeah. What is in the works for Monday? Cardiology guy, how are you doing? 9th May. Yep, that's correct. The dividend date for the EX dividend date for Pfizer is Thursday. So if you want to collect the dividend, which is only 42 cents, okay, which is over 1%, that's an idea. Okay, you have to buy it Monday, Tuesday, or Wednesday. You got to buy it before Thursday, the 9th. So what do those numbers look like? Okay, Pfizer, 27.87. Okay, 27.87. Ooh, did you see that? Guys, take a look at this. Last trade, 27.81. The bid, 27.83, 27.87. Both of them are higher than the last traded price. That's a little clue that the market maker is going to push it up on Monday. Okay, great. But here's the thing. At 27.87, I'm going to look at the 28s. The 28's only paying 19 cents. Okay, so if you add the 19 cents along with the dividend, then you're getting close to 2% for the week. But let's take a look at the chart. What is the chart telling us? Okay, a year ago, Pfizer was at 38.36, has a triple top. Look at that, triple top. 3 times it wouldn't break out past that number. That's 40, what is it? 40.37, 40.34, 40.36. Look at 3 times. 1, 2, 3. And that was back in June, middle of June. All right, hold up. All right, that's the high. The bottom, a triple bottom, check that out right over here. So here's the high, here's the low, there's where it was, here's where it is now. Okay, I like where it is now. Let's take a look. Take a look a little bit deeper. 90 days ago. Right there. Okay, 90 days ago, which is only 3 months ago, okay, opened up at 26.66. Okay, topped up for the 90-day period at 28.69. The bottom was not Friday, but the previous Friday. Now, I don't 100% like this. Let's take a look at the last 30 days. Now, you really have to ask yourself this question. 30 days ago, we opened up at 26.56. Okay? Look at the high. Look at the low. What usually happens on a 30-day high? Time to pull it back. Sorry, buddy. I mean, don't get me wrong. The numbers work, okay? The numbers over here work, but look at the chart. Thursday was the high of the 30-day period. What do you think is going to happen next? Basically, anyone can see that. Okay, here's a high, drops down, comes up, drops down, goes up. Where do you think it's going next? It could continue higher, but do you really want to take that chance with your money? That's why I say, don't listen to anything I say. You have to make up the decisions yourself. So let's take a look at what the stock normally does this time of year. Normally this time of year, flat. Okay, here's where we are, the blue. Okay, here. Next 2 weeks, nothing. No big moves to the upside, no big moves to the downside. Just because the numbers work, you have to ask yourself, do I like Pfizer? Okay, it's at the 30-day high now. Can it go 5 more days to the upside? Yeah, it can. But what's the odds? Look where we are in here. Okay, 1, 2, 3, 4, 5, 6. 6 days to the upside. And you think it's going to go another 5? Really? That's a choice you have to make. If you click the comment field on YouTube, you will also be able to read people's questions. Really? Live chat, all message visible. Yeah, there's only 2, and that's from Michael or Doc Botox. Okay, those are the only 2 questions I see. Now remember, I'm broadcasting on 2 different channels on YouTube. Okay, this channel, which does not have me on it whatsoever and does not have all the questions, okay, and one that looks just like the one on TikTok, which has me and has this in the background. Okay, so there's 2 channels on YouTube that are being broadcast on. Diana Shipping. Really, Mitchell? DSX? You really want to do that? DSX. No. Okay, you must be new because I say I don't do monthlies. There's only 12 months in the year, which means I can only get 12 checks. No thanks. That's monthly cash flow. And if you want to do monthly cash flow, hey, more power to you. I don't. I like weekly cash flow. Jim Bowen, see you in the morning. Yes, you see me in the morning from Logan Airport. PFE earnings were a nice surprise. Okay. What are your thoughts on Disney tomorrow? Disney. 114. The 114s are going for 355. Holy cow. Before I do that, before I get too excited, oh, that's horrible. Okay, Disney has been paying dividends since 1982. Okay, 1982 is 1 cent. 83, 1 cent, 84, 85, 86, 87, 88, 89, 90, 91, 92. 1 cent. That's crappy. Then in 92, it went to 2 cents. And it stayed at 2 cents all the way up to 95. Then 95 went to 3 cents. Then the 4 stayed at 4 for a while, then 5, then to 21, to 35, to 40, to 60, to 75, to 86. And then they dropped their dividend twice. And then they dropped it a 3rd time. Okay, so for Disney tomorrow, I'm going to say, if you like Disney, okay, they're not consistent with their increasing of the dividends. That's number 1. Okay, number 2, let's take a look at the numbers. Okay, a year ago, we were at 99.22. Okay, here's your high, here's your low, where it was, where it is. Okay, I like the chart the way the chart looks. All right. Now, the bottom of the year for Disney was at 78.54. Finished out the year last year at 90.94. Okay, 90 days ago was the 90-day bottom. Okay, 90 days ago, 90-day bottom, 90-day top. There's where it was, here's where it is. Okay, she gaps up. Wait a minute, what was that number? 96.49, 90 days ago. Now we got a double top at 123.74. Okay, end of March, beginning of April. Okay, last 30 days. Okay, look at that. Okay, that looks pretty. 30 days ago was a 30-day high. She drops down to here, comes up, drops back down again. Here's your 30-day bottom on Thursday. Wednesday. Wednesday was a 30-day bottom. Thursday and Friday are 2 up days. Now, look how much room you have to go to the high. to challenge that 30-day high up here. There's plenty of space. Okay, what does Disney usually do this time of year? This time of year, okay, 3, there's 10 right there, and there is 17. That's the next 2 weeks. Okay, here's the question I ask. Now, that's not guaranteed. That's just based on historical performance. So you have to ask yourself the question, do you like Disney? Look at what they're paying. At 114, and ooh, check this out. 113.66. That was the last trade. 113.75, 114.02. Both are over the last traded price. That's usually a clue that the market maker is going to push it up. So at 114, we're looking at $3.55. That's freaking huge. Let's take a look at that number. Okay, at the 14, it's $3.55, and divided by the purchase price, 114. Not even bother with that. That's 3.1%. If you like Disney. Now, Disney does pay a dividend. They pay it often, but they don't increase it consistently every single year. In fact, they pulled it back last year. But are you okay with it? Okay, that's a question. Are you okay with the fact that Disney pulled back on their dividend last year? What was it? Okay, in 2019, they didn't pay anything in 2020, didn't pay anything in 2021, didn't pay anything in 2022. Okay, and most of 2023, they didn't pay a dividend either. That's almost 4 years of no dividends. And here they're coming up with 30 cents. 4 years ago, they were 88 cents. Now they're throwing 30 cents at you. Come on. Ask yourself a question. Do I like Disney? And are you okay with getting 3% and getting a dividend? It's not what it used to be. That's why I say, don't listen to what I say. You guys have to figure out what you're going to do for yourself. Because ultimately, it's all your decision. But going by the numbers, it's a yes. And going by the chart, it's a yes. But where it comes in as a no is the fact that they're kind of wonky on their dividends. Thanks for looking at Pfizer, not a problem. Franco, Nevada. Edits. It's Helena. Hi, Helena. How are you? Mo, I don't know, what was that question? I'm telling you because last time you said you don't see any questions despite the fact there was questions. All right. Let's see if I can do this again. Okay. Here's the YouTube camera. Okay. Do you see any questions on the YouTube camera? There's no questions on the YouTube camera. Okay. I can't answer questions where I don't see them. Now, with the one with the screen that has this, I don't see those questions at all. Okay. So on YouTube, you have two options. One is this screen here, and the other one is with what you're seeing here, with this in the background and me in the foreground. Okay, that one I see questions. The one where it's just this, I don't see questions. Sorry. Do you sell covered calls that expire Friday in the same week? Yes, I do. Ooh. Will XRP go up? I don't know. I don't do crypto. Hey, David, how can I learn? Hi, David. How can I learn to trade stock market? Well, my suggestion is just keep coming back and to learn slowly. I'm here every night. Hector Pedro followed. Hey, thanks, Pedro. Parshanika. Oh, Parshanaka. Parshanaka. Good morning. So you're on the other side of the planet if you're saying good morning. Kagdala. Pожалуйста. Spasiba. I forget what's it. I had Ford for years thinking of getting out. Zane can help you out with that one. I don't give advice to people. All I can tell you is if you're up and you don't take a profit, here's what I say. Nobody ever went broke taking profits. And it's not a profit until you take it. I'm new and want to say thank you for your knowledge. Well, alrighty there, Lost Dog. I don't believe in XRP. It's only a cash cow for Ripple. Okay. Now, I don't do cryptocurrency at all. What would be your best three right now? Oh, my best three right now, that would be Walgreens, Nordstrom, and Macy's. Okay, next. What are we looking at next? RADCQ. Are you kidding me? Really? RADCQ. Who came up with that one? RADCQ. Yeah, no, it's monthly. EMR. Emerson. What are your views on puts? I don't like puts. It's a negative vibe. Pedro. It's never a loss until you sell. Correct. Right. Or is it more complicated than that? No, basically that's about it. Bank of America. Wow, Brian, not like Bank of America is one of the people very rarely do Bank of America. All right, BAC is on the list, Brian, but I probably won't get it to tonight because it's 11 o'clock now. Got 30 minutes, and I have more than 30 stocks to go through. Sorry. EMR, Emerson Electric. I love Emerson Electric. Over 100 years old. Dividend king. Gotta love it. Maztec. Cool beans. Hello, I'm an option. If an option expires, what's the process to put options back on that stock? Well, Blade, that's kind of a complicated question. Okay, usually, is the option expiring in the money or out of the money? Would you invest differently if you were younger, or would you still do covered calls? Well, I would do less covered calls and more spreads and more, and I wouldn't go for capital appreciation because it's a hit or miss. Okay, stocks go up, they come down. Stocks go up, they come down. Stocks go up, they come down. That's all they do. But anyway, Blade, that question, if the option expires, okay, it would depend. Is the option expiring in the money, at the money, out of the money? What did I buy the stock at? What's my profit and loss ratio for the week? I like to make it as simple as possible. Look at EMR right now. EMR right now, 109.85. I'll be looking at the 110. So if I buy it at 109.85 first thing Monday morning, I'm going to be selling the 110s. The 110s are going for 70 cents. That money goes in my pocket right away. If the stock on Friday is 110 or higher, then I will be cashed out and I won't own the stocks the following Monday. If it is like 109.98 or 108 or 105 or whatever, if it goes down, then most likely I will take that stock into the following week and I will write another covered call against it. Okay, so you are buying and selling stocks weekly, correct? Some holding on to longer than others. Sometimes, yes. You said you would do more spreads. Do you mean option spreads? That is right, I would. Pedro, he's buying stocks, selling the covered calls. That is correct. I am wonderful, Isaac. How are you? Blade, you're welcome. All right, so next on the list, Emerson. Emerson, 109.85. The 110s are going for 70 cents. That's a no. Starbucks. S-Bucks. S-B-U-X. I actually own Starbucks at 88. It's at 73. Okay, so you guys want to know what happens when stock goes down? There you go. Starbucks. I bought it at 88. It's down to 73. Okay, I'm not selling options against it this week because they're worthless. Alrighty. EMR is a no. MPC, Marathon Peak Corporation. Okay. 183, the 182.50. Okay. I really don't know what that means. Buy stock, selling the call. All right, Pedro. See how I can explain this. All right, when I buy the stock, at this moment in time, we're looking at Marathon, okay, the gas station, okay. I can buy it tomorrow morning at $183, okay. The closest strike price when you're doing a covered call, it's one of the safest strategies that is. So if I buy it at 183, I can sell somebody the rights to buy it from me at 182.50 and collect $2.61 per share. Okay, now I lose 50% right off the top, 50 cents off the top. So now I'm making $2.11. Okay, that's my profit, $2.11. So what does that equal? All right, $2.11, clear this, $2.11, and I divide it by the purchase price, 183, and that comes to a grand total of 1.15, okay? The purchase price is here, 183. I can sell it to someone for 182.50, which is less than what I paid for it, okay? And I collect 1.15% for the week. Now, as long as the stock stays at 182.50 or higher, I'll have all my cash back again the following Monday. Blue Wolf, thanks for sharing there, dude. Secretary, why aren't you selling Starbucks calls at a lower strike? Secretary, when I said I bought Starbucks at 88, I didn't say I bought the stock. I have it in a different trading strategy in a different account. Okay, so there's no value to it whatsoever. You're welcome, Pedro. Come back every night until you understand it. The main idea is to understand it. Does it make sense? Okay, you're buying something. Let's say you buy something for $100. You're selling it for $100, and then you collect what's called a non-refundable deposit for someone to buy it from you for the exact same price you just paid for it. Okay, so if I'm buying it at 83, I'm selling it for less than I paid for it. I'm collecting a profit through a covered call to make a profit 1.15%. Hey, Hollywood, I want to learn your detailed strategy. What's the best way to learn? Well, you could join the morning trading group. I love you. Would you close Starbucks option at a loss or roll? Okay, now I told you I bought Starbucks at 88. I didn't say how I bought it or what type of strategy I'm using. Okay, I'm just holding on to it and waiting for it to go up so I can get my money back. What do you think about H-bar? No. Can you make more on option spreads? And is that risk higher? Yes, you can. You can make over between 100 to 200% on spreads per year, 100% to 200% on spreads per year. But there's more risk. Okay? With bigger risk comes bigger rewards. How many more on your list? How many do you do a night? Well, Malcolm, I do as many as I can, but as I'm answering questions, it takes away from looking at them. What are all the stocks you have circled now? All right, Roscoe, I'm going to tell you that tomorrow morning. Okay? I don't need to give away too much. And plus, you asked that question last night. I told you that last night. Didn't change from last night to tonight. No, I don't think we added anything tonight. So it was the same as it was last night. Okay, so MPC, Marathon Peak, we're looking at the 183. Can you teach us option trades someday? Yeah. Okay, you have to be invited to that. Okay, which means you got to perfect this one first. You got to be a member for at least 6 months before you get invited to the next one. What trading software do you use? This is Thinkorswim through Charles Schwab. Okay, you can actually download this for free and do some free trading with a virtual account. Now, I've been trading for over 20 years and I still do virtual accounts because it helps me stay focused, keeps my trading sharp, because I still make mistakes every once in a while. Evan, SPX, that's going to be a no. SOX is going to be a no. Sorry. Okay. SOX, no options, no. SPX, well, SPX has daily options. Dailies, yeah, I don't mess around with this. But they don't pay dividends. Good long-term stock. I don't do anything long-term. Longest I've ever held anything was 9 months, and I didn't do it willingly. All right, next on my list here, Global Life, GL. This is another one from Warren Buffett's list. 79, 79, the 80s. Ooh, nice. All right, where did Intel earlier today? I actually have Intel. I meant to ask you, how long have you been watching the S&P 500? I don't watch the S&P 500. I know it sounds weird. I don't. I only look at the stocks that I invest in. That's it. What time will you be hopping on in the morning? All right, Pedro, I jump in the morning at 9 o'clock. Okay, 9 o'clock Eastern Standard Time. EL, Buffett sold for tax purposes. It's still his largest position. Warren Buffett selling Apple. Yep, what do you think? I don't, no problem with that. What do you mean? Okay. Yeah. Yeah, a payable member for 6 months. I'm a nice guy, but I'm really not that nice. Okay, I'm teaching you how to get 50% per year, free of charge. Okay, and I invite people to go on my live trading, and you pay for that. It's $100 a month, and I actually walk you through all the trades and show you my trades. So you get to watch over my shoulder as I'm doing my trading, and for that, it's $100 a month. Okay, after that, I answer all the questions you possibly have. And if you do a good job at 6 month time, then I invite you to the other trading strategies, which pay a lot more, but they're a lot more risk also. You're Brian Spence, you want to look at Cisco. I bought Intel on Friday at $30. That's cool. I like that. Do you look at implied volatility? No, I don't. Oh, Nevermind has no weeklies. Sometimes I don't. You must love those pants. Okay, I'm not quite sure. Oh, you mean my pajamas? Yeah, I got like 3 or 4 pairs. I got a blue shirt. I got like 12 of them. I wear 2 different shirts, but they look the exact same. Where to register? Thoughts on eBay? Cool. Where to register? Right here. Oops. See, right up here in the bio, Dividend Stock Talk. If you click on there, you go to the bio, has a link to my website, The 10-Minute Trader. Okay, the video explains what we do. Second video explains the no risk factor to this thing. Right there. Right there is the live trading. Click on that, and that takes you to my Patreon, Dividend Stock Talk. Okay, where were we? Let's go back to here. But if I want to learn option spreads immediately, can't I join that group? Well, how do I know you got this one down pat? I don't like giving people. I don't like to lead a place where I don't feel you fit, if that makes sense. Okay, I have no idea how well you're doing on this strategy. This is a simple, easy strategy. It makes 50% per year, okay, or more, okay? But if you come get this one down pat, what makes you think you can get another one down pat, which is more complicated than this? Pickled Peanuts, you're back again. Can I ask you an opinion on something? Sure. I know covered calls already. Yes, I know you do, because you've been here for a while. Okay? But you haven't been in my trading group. So just because you say you do doesn't mean that I'm convinced that you do. Alex, I need help getting started. All right, Alex. Not a problem. Oh, 11:15. Okay, what are we looking at next? Oh, GL. Globe Life, 79. The 80. The 80 is going for $1. Let's take a look at that. Bought some 52. Bought stock 52. Sold call for $100 for the 23 for 9 months. Is that a good deal in your head? Why would you want to do it for 9 months? But don't get me wrong. If you want to put money aside and just collect that, for 9 months, yeah, fine. I'm going to follow you. I need a mentor. Well, that's good, Alex. I'm here every night. But pickled peanuts. I'm a little lost, okay, because you did that for 9 months. Do you have any idea how many weeks that is? Okay, you multiply 9 times 4, that's 36, that's almost 40 weeks. Okay, that's 40%. Bar stock 52, sold $100 for 23. You're losing out on that one, buddy. Do the math. 1% per week. 9 months is 36, I think 36 to 40 weeks. Okay, 1% per week, that's like a 40%. Okay, now 40%, if you bought it at 52 and you sold 100 and you only got $23, that's okay. I can see it. But hey, I don't tell people what to do. I don't. Uh-oh. I should pin you on something. Oh, I know cover calls already. Okay. I need help getting started. Okay. Okay, got it. I'm gonna follow. I need a mentor. Okay. Where did you learn how to trade? Through trial and error. And I went to a whole bunch of seminars. Webinars. I went to one seminar, it cost me $3,000. Went to another one, it was $2,500. Okay, I lost $91,000 in a week because I did something stupid. Never do. That was an expensive lesson. I used a 23 to roll back in. Okay. Brian Spence, NUE. Oops. Oh, wait a minute. We're looking at GL. Let's take a look at GL. Okay, let's step back and look at GL. Now, GL is on Warren Buffett's list. Okay, Globe Life is on Warren Buffett's list. A year ago today, 107.74. The high of the year, 132. The low of the year, 38. 38. Is that right? 66% decrease? So from the high of the year, 132, dropped all the way down to 39. Wow. All right, anyway, last 90 days. Okay, 90 days ago, we're at 120.27. The high was 132. That was back in the end of February. Big drop, okay, on the 10th. Okay, she goes from 105, drops all the way down to 39. From 105 down to 39. What the hell happened there? Got to be a question to answer. Last 30 days. Okay, here's your 30-day high. 5 days later, your 30-day bottom. It's going up. Now it's channeling. Look at that. Between 70 and 79. Sounds good. All right. I have done options before without owning the underlying option, but not done spreads. Okay, I got that. Alrighty. 23 dividend by 52 is 44. Not bad. You're absolutely right. But as James said, it's harder to guess the market 9 months out. You're absolutely right. I mean, I have a tough time. I'm not always right trying to guess 5 days. Here, I have no clue. Okay? 30-day bottoms here. She went up. Now she's channeling.
kind of looks like it's going sideways. Stocks don't move sideways, but you know what I mean. No rhyme or reason to which direction.
Okay. How much money do I need to save up for my setup? My room is empty. All right, Alex. How much money do I need to save up for my setup? My room is empty. RN. Okay, Alex, I have no idea what you mean by that. But if you want to have a conversation, okay, old school style, send me your phone number. I'll give you a call. We'll chat about it. But won't be tomorrow. Because tomorrow I'm traveling down to Florida, so I'll be actually doing my live trading from the airport tomorrow. And then tomorrow night, I'll be back on tomorrow night. How can I join your membership trading room tomorrow, 9 a.m.? Well, you sign up on the Patreon, which is, okay, you go to The 10-Minute Trader, okay, the10minutetrader.com. Okay, halfway down the page, you'll see this little icon right there, Trading Live Online, okay, and that will take you to Dividend Stock Talk and Patreon. Do you listen to analysis or go by book value? Ooh, that's a good question. But I'm going to answer the question for you, Pickled Peanuts. You ready? I go by, and I believe I told this to you before. I go by the EX date. All right. I look for companies that have increased their dividends consistently every single year, year after year, higher and higher and higher and higher dividends every single year consistently. You can find that out. You go to Yahoo Finance. Where is it? Yahoo Finance. This one right here is Disney. Okay, look at the dividends. Right there, 30, 88, 88, 84, 70, 78, 71, 66, 115. The numbers aren't consistently going higher. So I won't do Disney. Okay, and look at over here. 2023, 2019. They missed 2020, 2021, 2022. They missed out in 3.5 years. No dividends at all. So Disney is a no for me. But if I go back and look at, hold on, give me a good one. Ooh, here's a good one. GPC, Genuine Parts. Look at the dividends. $1, 95, 90, 82, so on and so forth. 79, 76, 72, 68, 66, 62, 58. Consistently going higher and higher and higher every single year. So if I'm going to invest my money consistently in a company, I want to be reassured that they're consistently increasing. James, I got the impression that you do not do option spreads today. Do you only teach it? Okay, Renaissance. Okay, I have 6 different accounts. I share 2 of them publicly. The other 4 I do not share, and I do not say what kind of strategies I use on those other accounts. Do I do spreads? Yes, I do. Okay, I do credit spreads, I do debit spreads, I do calendar spreads. Okay, so I only do stocks that have increased consistently, because when the stocks go down, and don't kid yourself, they do go down. They go up, they go down every day. Let's go back here for a second. Okay, this is Globe Life. Look, it goes down, goes up, goes down, goes up, goes down, goes up, go down, go up, down, up, down, up, down, up, down, up, down. Here's the high of the year. Here's the low of the year. Okay, the high of the year, she came down. The low of the year, she went up. That's all stocks do. The idea is to look, when are they paying out their dividend? Because stocks have a tendency to move up just before the dividend. So it's all about when they're paying, not what the big boys are saying. Well, why do you think the big boys are saying what they're saying? Here's something fun to look at. You'll like this one. Okay.
Here we have Globe Life, right? Now, Globe Life has an average trading volume of 1.7 million shares a day. Average, look at, that's the average. Okay, down here. These 2 days right here, okay? What day was that? The 11th and the 12th of April, okay? Big drop. Now, what I want you to pay attention to is right up here. There's the open, it says O. Here's the high. There's the low. There's the close. All right? Now, here's the bid. Here's the ask. What is that? Okay, the bid is what the market maker is selling it for. I mean, is buying it for. Okay? And what the market maker is selling it for. The difference between the two. Hold on. James, how much do one need to have in capital to be able to live solely off option trading? Approximately. Well, Renaissance, it really depends on what your spending habits are. Okay? Now, if you take whatever account you have, and using this strategy here, just this strategy, okay, this one gets 1% per week, which is roughly about 50% per year, roughly. So if you had 100 grand, you'd make about 50 grand a year, hypothetically, okay? Alex, let's say spending habits are 200,000 a year. Well, then you need at least 400,000. If you're spending 200 grand a year just to live comfortably, you're going to need 400,000 a year at 50% per year in order to live comfortably without your account going down. Okay? Now, I live very comfortably because I have hardly any bills at all. Hardly any. Okay? I live very comfortably with what I have. I make 1% per week. Now, if you want to do spreads along with this, I personally, okay, would do like an 80-20 split or a 75-25 split. Do 75 this way because it's safe and predictable. Options are not safe and not predictable, but you get a lot more money. Do you have any pension from the military? I don't. Very thrifty. That's correct. I can live very comfortably off of 20 grand a year. That's me. Okay? I don't know who said they needed 200 grand a year to spend. Hey, more power to you. You know, I'm at that point in my life where I don't have any bills. But then again, I'm in excellent health, so I have no bills. Food Bank and ODSP, I presume. Oh, hell no. I think we had filet mignon we had stuffed peppers with filet mignon the other day. And I made lasagna. I'm an awesome cook, too. Anyway, all that being said. Doomed crypto. How much capital do I need to make 7 to 10 grand per month? 10 grand a month. All right, wait a second. Alex, I was just making estimates. I spent 30,000 a year on rent, 30,000 a year to save a year or so, 60 maybe total. 60. Huh. Okay, so who said they need, what was that number? How much capital do I need to make 7 to 10,000 per month? 10,000 a month. I'm gonna have to get my calculator out for this one. Damn it. Clear. 10 grand divided by 4, 250,000. Okay. Okay, so you need 2,500 a week to make 2,500. 1% of 250,000 is 2,500 a week. So 250,000 will give you about 10,000 a month. QYLD is a no. I was just making estimates. I spent 30 grand a year on rent and 30 grand to save a year, so 60. Okay, Alex, you're missing the point. Okay, how much do you need to live comfortably? If you only need, wait a minute, 30 grand a year, that's just for your rent. Holy cow. Okay. Yeah, you just work the numbers. Uh-oh. Renaissance. James, you're the man. I will contact you regarding option spreads within the month. Okay, that works. Tell me how you budget your FUBDS. I have no, oh, funds. How do I budget my funds? 98% of all my money is invested at all times. Okay, now I'm at the point in my life where I travel a lot. Okay, I have a camper trailer that I go travel around in. Oh, I mean, I've seen Chris. What's a good email? Okay, whatever. Okay, now I travel a lot. Okay, so I have a place up in Maine. I have a place in Massachusetts. I got a place down in Florida. Okay, I'm going down to Florida to help get my mother's estate in order. Okay, so I don't have a huge outlay on rent. I'd say it's less than 12,000 a year for my rent, and then my food bill's only like $100 a week. Okay, so that's another not even $100 a week. It's like 20 to 40 bucks a week. I don't need that much. Yeah, so my bills really aren't that great. But like I say, I live very comfortably on what I make. All right, more questions. We're almost 11:30. 240. Oh, Mikey, you need 240 a year? Wow, all righty to you. And my name is Renaissance or Resonance. All right, well, I'm getting old. My eyesight's not that great. I'm sorry. Resonance. Okay. My household spends about 120 a year. So 100. All right, Al, you really need to talk to a tax strategist. If you're paying 60 grand a year in taxes, holy shit. Okay, why do you think Warren Buffett, Jeff Bezos, Donald Trump, who else? Elon Musk don't pay any taxes? Okay, I would really talk to a tax strategist to figure it out. What's the advantage of this dividend strategy versus using Smith else? Oh, something else. There isn't. Okay, now I use this strategy because it works for me. Okay, I created it for my 9-year-old daughter over 15 years ago, back in 08. It's safe, predictable, consistent 1% per week, which is about 50% per year. If you know another strategy that makes 50% per year or more consistently, I'm sure a lot of people here would love to hear it. I'd like to hear it because I'd like to be able to take a look at it and see how I can, work it backwards and how I can make a little bit more money than I'm making now. Granted, you also have to look at the amount of time and effort you put into it. Okay, I only put like 10 or 15 minutes a day into it. Okay, so I'm in 5, 10, 15 minutes, maybe 20 tops on my own personal accounts. Now, the trading group, I spend a little bit more time in because I'm actually teaching people. I'm actually helping them with their accounts. That takes a little bit longer. For my own personal accounts, 15, 20 minutes tops per day. Okay, and I make a very comfortable living. And I don't know any other strategies to get that. Julie, nice to see you again. All right, 20 to 40 a week, come on. Oh, Bob, it's just me. What do you think what do you think I eat every day? Okay, I grow a lot of my own food. So is GI a put for Monday? GL a put for Monday? I can't tell you that one. Not much more. Julie, hi. When will your tax person come online? You know what? I have to coordinate with her. I'm up against her schedule. I'm here every night. I have no idea what her schedule is. Okay, and she's just starting a new program that I don't know how much time she has available to dedicate to us. Okay, but I did tell her if she gives me enough time, I can drum up enough business so I have enough people here to ask questions. Sean, Can you tell me more about how you make 10 grand a month on my investments? Well, Sean, I didn't say you make 10 grand a month on your investments. I didn't say that at all. I said that I make a safe, predictable, consistent 1% per week. And somebody asked me how much would they need to get about 10 grand a month. Well, that's about 250 grand. 250 grand, 1% a week is 2,500 a week. 4 weeks, that's 10 grand. L, my wife and I are both salaried employees. We do all the deductions we can. Al, okay, if you're salaried employees and that's the only thing you do, you got to tell your wife either do Tupperware, ACN, Amway, do your own consulting, do something on the side for your own business. Okay, it's only about maybe $400 or $500 a year to get a business account. Now, the nice thing about having a business account, Al, any and all money put towards your business, whichever it could be, is a tax write-off as opposed to anything you make. So, hypothetically, from the numbers you gave me, you pay 60 grand a year in taxes. Let's say, hypothetically speaking, you do Al and Mary, I don't know what your wife's name is, but Al and Mrs. Al's consulting services. And let's say, hypothetically, Al and Mrs. Al's consulting services spends $500 to $1,000 a month on a car, a company car, okay, insurance for key employees, corporate meetings once per quarter to Hawaii or the Bahamas or the Florida Keys. Any and all expenses directly related to your company is a tax write-off. Now, if you carry around, there's so many other ways you can do it. Your best bet is talking to a tax strategist. Okay, 200 grand in taxes, Al, you definitely need to talk to a tax strategist, and you definitely, both you and your wife. Hey, Simon, how's it going there, Simon? Both you and your wife really do need to open up your own personal businesses. Okay, now, the way the IRS structures it, as long as you are pursuing a profit, any and all losses on one endeavor can offset gains of another endeavor. So if you're a salaried employee, now a lot of salaried employees do Amway, ACN, Tupperware, one of those, something on the side. They call it a side gig or a side hustle, whatever. Okay, anything you put into that. Okay, new clothes in order to have meetings. All right, so you need a nice shop suit. That's a tax write-off on your business. Any and all business expenses are tax write-off. And if you take a closet or a certain section of your house, even your garage, part of the basement, and you use that as an office, so you each have your own office, that square footage is a tax write-off, and that comes directly off of that 200 grand you pay in taxes. Okay, that tax code book, that big fat book, is all the different ways you can deduct from your taxes, so you don't have to pay taxes. Anyway, talk to a tax strategist or tax planner. But seriously, you have Al's, Al's detail shop, Al's, what do you call it? Al's tutelage, Al's something. Okay, do something on the side. Anything and everything you do as pursuing an effort on your own business is a tax write-off. Become an influencer. Influencers write a whole bunch of shit off. All right, anyway, let's go to some more questions. We're at 11:30, past our time. Michael, my taxes last year taken out W-2 was 178 with a W-2 on a W-4. Hope starting a company help. Yeah, a company will help you, dude. Because company, oh my goodness. I'm trying to think. Because I had a manufacturing company once. I had a manufacturing company for 15 years. And I wrote off everything I possibly could. And I hadn't paid taxes all the time I had that business. Okay, shooter. Michael, does a side hustle really help that much? Well, all right, Michael, let's say hypothetically speaking, you went to school for a certain period of time to learn what you know. Okay? So you can start out your own consulting business doing exactly what it is you know that you already learned. Okay, that consulting business, let's say you're an influencer, you get online and you say, hey, this is Michael so and so, this is what I do, this is what I know, this is what I am teaching you today. Okay, you have to make a pursuit to do that. Now, anything and everything you have directly related to that is a tax write off. Okay, so let's say hypothetically, you need to show up at a client's place looking nice and spiffy, driving your nice brand new Mercedes. Well, that brand new Mercedes is a tax write off because you need that for your consulting business, because you can't show up at a client's house or a client's place of business driving a Pinto, driving a GMC, or driving a piece of crap. No, there's certain ways of doing it. Okay, you can go online. How are the best ways of tax deductions on a home-based business? There's a whole bunch of them out there. Anything that you spend pursuing a profit, okay, even if it's Amway, okay, you go to meet people for lunch. Okay, you take your wife out for dinner. So you talk to the waitress. Hey, you interested in doing something? Slide of that, and that dinner is a tax write-off. But you have to write it down, a little book. Okay, talked with Dee Dee so and so. What's her name? Blah blah blah. And then you just what your expenses were. Had client meeting at Joe's Bar and Grill. Spent $150. Have a conversation with blah blah blah, doing about this, whatever. As long as you have a receipt and you have it logged in a book and saying that you're at least trying to throw a profit. Okay, the pursuit of a profit. I think that's the way they have it labeled in the book, the IRS. A pursuit of profit. Okay, any losses you have opening up a new business. And if you have one and your wife has one, you can hire your kids. You have to pay them a certain amount of money, and that is a tax write-off also. Okay? There's a lot of ways you do tax write-offs. But anyway, I'm not a tax accountant. I'm not a tax anything. Don't listen to a damn word I say. Do your own research. Ask questions. You don't like the answer? Ask someone else. You don't like that answer? Ask someone else. You keep asking a question until eventually you get your income taxes down to zero. Because that's what that big fat book is. Okay, it's called, what do they call it, the IRS code. The code is all the different ways you can have tax write-offs. For what? Well, you can't write off for that. Well, if I did it for this, could I? Oh, yeah, you sure you can. The answers are there. You just got to ask the right questions. I don't pay any taxes for my business. Oh, pickled peanuts. I don't pay any taxes either. I have mine set up for years. I think I don't know how long it's been. Michael, missed that question. Have been having a very, very hard time finding a real tax strategist. Go right here on TikTok, right up in the search bar. Tax strategist. There's a bunch of them on here. What is your win rate when it comes to option spreads, may I ask? My win rate for option spreads is only like 70 to 80%. Everything is a write-off. Yes, it is. James, my last question before I throw in the towel. What is your win rate when it comes to options? I just told you that. Michael, Your investment business doesn't allow you to write off losses greater than 3,000 or 30,000. All right, Michael, it's not a business. It is an educational. Okay, so I have it structured in a way where it's educational, where I'm teaching people, and I'm also an influencer. So that's what they call people get online. Is I'm blurting out information. I'm trying to influence you to do whatever. Now, I don't give advice. It's just that, hey, these are the numbers I'm reading. This is what I'm looking at. I'll read it to you, but I won't tell you what to do. Okay? Coach Joel. Hey, it's past your bedtime. Yes, it is. I'm just getting ready to say bye. She just came out, got her last cigarette. Do you do option trading? Yes, I do. What platform do you use? And have you heard of funded accounts? Matter of fact, I have heard of funded accounts. It's where I trade other people's money and I get a percentage of it. Yeah, I heard of that. I joined Patreon. How do I get a Discord invite? All right, Seeker, I will send you a link to that, probably first thing in the morning. That is a very good win rate. Thanks. Good night. Catch you guys later. It's 11:45, and I will see you guys in the morning. Now, for you guys I'm going to be seeing in the morning, I'll be doing it from Logan Airport. So you guys have a great time. And we'll go there. Okay, understand. I always wondered if an investment business could be a write-off. Yeah, but you have to have it structured properly. Okay, guys have a great day. I'll catch you again tomorrow. Off and done and 9,000, 9,800. Honey, I signed out of Instagram on your phone, and now I can't log back on it. So I couldn't do Instagram tonight.
Why?
Because I couldn't log back on.